Market momentum is slowing down, and this one chart is starting to send a warning signal again. It helped us out last week, and I have a feeling it will help us out this week. I'll give you the bottom line up front. It's mainly the semiconductors chart, although there are some additional charts assisting in the slowdown analysis. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stick around until the end of today's show, because get this, I've got 11 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight on the SPY daily time frame chart, and I want to begin with market expectations. Is it reasonable that the market would slow down here after a substantial rally in the upward direction? The answer, in my view, is absolutely yes. This is a fine place for range compression to start. Remember that markets move from periods of consolidation or range compression to excess, aka trend, in one particular direction, and then back into range compression. And ultimately what markets are doing here is figuring out whether or not this is going to be deemed fair value, and if we need another phase of range expansion to the upside or range expansion to the downside. Now, we can add some context clues here, obviously, because we know that the trend is up. This is the highest high in the trend count. This could very easily become a higher low in the daily trend count. Remember that this would be your higher low. It's happening over the top end of the two-day balance range from the Monday and Tuesday session of last week, which was a shortened holiday trading week, but look at the lower wick of Monday's session from this week. It's a perfect area of support, perfect lower wick, right off of 618.50, and you can see that Tuesday forms an inside bar. Today, we broke that inside bar in the upward direction for a stronger close towards the top end of what I would start to consider a multi-day balance that's forming here. So the next steps out of this market are really to gauge whether or not consolidation is going to continue, or whether or not we are going to get a move to continue the trend in the upward direction. If we can all agree, which I think we can, that we're in an uptrend and this is a set of lows, this is possibly a set of higher lows, we have highs, this is the highest high in the trend count. That's an uptrend. If we're in an uptrend, the market is going to most likely try to seek some kind of higher high in the trend count next to determine whether or not value is going to be found at higher prices. So a Brigade bolt over this 625.75 gets pretty attractive for continuation into the upper edge of the weekly expected move. That comes from the options market. That's up around 635. Now, as we mentioned in the intro, there's definitely signs of momentum slowing down, but it's not bearish. So even if the market were to persist and continue its consolidation in this range, I would not be bearish here. From a very basic perspective, right, throw a flagpole on there, and everybody knows Technical Analysis 101 probably calls this a bull flag at all-time highs. It looks pretty darn good to me. If we break the bottom end of the bull flag consolidation, if the market were to fail underneath this 618.50, it's not the end of the world. I probably wouldn't seek big shorts in here because, as we talked about on Saturday, it's still very possible that a daily higher low could be preserved over the previous all-time high at 613. The only time where I would really start to get bearish on the daily time frame is if the market were to break under 613, offer a lower high, and then give us a better chance at thin structure retracement here into the top end of this previous consolidation at 604.75. That would also align with the weekly higher low we were talking about on Saturday, but as of right now, given today's daily structure, it doesn't really seem likely that that is a high probability outcome into the end of this week. Let's get a little bit more granular here and take a look at the hourly chart. If you take a look at the hourly, what we can probably all agree on as well is that today starts an hourly trend reversal back in the upward direction. As of last Friday, we knew that this, and really it was a shortened week, so this is Thursday's session of last week, we knew that this overhead supply was going to pose a threat for a possible breakdown or pullback. I shouldn't really call it a breakdown, but rather just a pullback. Now, this top end of the two-day balance range here was a great spot for a higher low, but the hourly trend started to offer the threat of a downtrend, right? You have highs. It was very possible that this could have acted as an hourly lower high, and from here to here, you absolutely have an hourly lower low. So if this is going to be a double bottom, it's very critical that in the short term, again, we're talking about an hourly chart here, so into the Thursday morning session, as long as we're over 622, you actually have the reversal of the hourly trend, right? And this acting as double bottom, as long as we're over the neckline, you're already starting to get that Brigade bolt action here at 622. As long as we can sustain price action over 622, the daily balance is in force here. I would argue that buyers are in control. The hourly trend is flipped back to up, and the odds favor something that looks like this for continuation into blue sky territories. The next ideal Brigade bolt, as we talked about on the daily chart, is over 625.75. that's what we have to the upside. I wouldn't really take a bearish stance here on the market, even if you were to start talking about this from the perspective of, okay, this is actually a double top, probably from the daily point of view, right? We know that the double top only triggers underneath the neckline. And what's the issue with 618.50? Well, if you short underneath that, you're shorting right into this choppy zone. Do you really want to be short through there? I personally don't. So instead, I would be pretty reserved on the short side here. I would just let the market do its thing and instead start to say, okay, can we find that daily high or low and attempt off of 613? If we throw on some Fibonacci's and some intraday anchored view apps, you'll see that this pretty much aligns with that same analysis. Intraday anchored view apps are first. Notice that we're above the entirety of the stack. There's really nothing here that would indicate sellers are really stepping up and oh my goodness, this is the worst thing since sliced bread. It's not. If the sellers were going to make it happen, then ideally they would have gotten an open in range today on Wednesday's open, offering sort of an H pattern here, a breakdown to another hourly lower low, and it just didn't happen, right? So instead, you can see that this gap up open instead offered the Brigade bolt over this key level, the inside bar high from the Tuesday session. We can come in here with our Fibonacci's because recall if we come in from the bottom of this move up to the top, as long as we're over the Fib 38.2, another reason not to be an aggressive bear here. Even if we were to drop underneath, once again, that 618.50, you've got the anchored view apps in here, you've got the Fib 38.2, I really don't believe, even if the market were to come down here, I would take an aggressive bearish stance. I would really have to see, as I've said a number of times now, a larger breakdown underneath the previous all-time high, which you can actually see from a fib perspective would align with the 61.8. If we clear up the fibs, you can actually see as well this really thin structure through here. So it's not like we have a bunch of consolidation to chop through. It's nope, if we drop underneath 613, this is a pretty lucrative trade opportunity, I would think, from point A to point B. We would need to make sure that market internals are, of course, supporting that the bears are stepping up. But once again, this is a back burner idea. As of right now, given today's Wednesday close, any consolidation up here over 622, the base case remains. Market bulls are in control. We're looking for the bullish continuation of the daily trend, which is seeking a higher high in the upward direction. Let's check in on the market internals because this is a place where we can start to see momentum slowing down. If you're not familiar with the market internals, check out the video tutorial in the top right-hand corner. What I want to call out is today's session, right? So today we technically opened on a very subtle gap up, and overall we did hold up outside of the inside bar range from Tuesday. So if we look at the action at the exchange level, you'll actually notice that the volume flows were not substantial. If you look at the advanced decline line, it does bounce off the zero mark, but it's not like we were in trend higher zone up here over 1500 all day. And notice that the cumulative build out of the tick is also fairly flat. So this is not a bearish call. This is not, oh my God, Matt, this, it's so divergent. We have to short the market into the ground. What I would want you to take away from the market internals analysis is that if you're chasing the highest high, if you're a chaser of a breakout here and the market internals look like what they looked like today, I would be pretty hesitant buying the highest high in here unless there is a no-brainer risk-reward Brigade bolt into blue sky territories. You need that higher low pullback above to confirm previous resistance as newfound support. If you're just chasing this on the highest high with nowhere to place your stop loss, doesn't really seem to make sense to me given what's going on here with the exchange level participation really starting to signal a slowdown. Once again, this is not a bearish call, but please just be mindful of your trade location if you're chasing the highest high. Let's take a look at the market profile for the ES. And what do we see here? I actually like what I'm seeing out of the profile because, and by the way, if you're not familiar with the profile, check out the video tutorial, top right-hand corner as always. What I like about this is that the point of control and the value area is actually, fairly, it's mild. It's a small drift in the upward direction here. Don't get me wrong, the point of control is outside of the previous day's range. That's progress in the upward direction, but it's not a top-heavy profile, which to me would indicate that if longs really got involved on this pullback to hold up over the prior day's value, because that's ultimately where the market did find some support in here towards today's lows, it means that buyers are located at really solid location, literally, and they're not going to just panic out of markets if we get a mild pullback into range tomorrow. If the value area was slammed up here, very similar to what we had on the Thursday session of last week, that's this bar way back over here to the left. If that's what this looked like and value was up here, then yeah, I'd be very concerned that if we break under value area low, suddenly this is going to act as a magnet. But the fact that this value is here would indicate, okay, longs are going to be pretty content even if we do get a pullback again to the Tuesday high of day, which would seem very reasonable. And once again, that's holding over the 622.50 mark over on the Spider's cash. If we just go here for a second, right, as long as we're over that Tuesday high, 622, 622.50, I really don't see any big issues. I don't see a reason for this buyers to panic in there because they're located at a decent spot. So that's the analysis. Once again, please be cautious of new higher high longs unless the market internals are lit up like a Christmas tree. I wouldn't short the market until we're underneath 613. Obviously intraday operators who are pretty slick, you could probably pull off some like Brigade bolt scalps to the downside like this. There's going to be intraday opportunities for that, but generally the thesis of the market still remains buyers are in control, but momentum is slowing down. It would not be unreasonable for a new balance range to form up around this area here. Let's take a look at the QQQ NASDAQ 100. Let's reset this to a daily chart. Let's jump into our Qs and see what's going on. Very similar looking chart. Obviously, the trend remains in the upward direction. Small difference here is that you did form a new intraday all-time high. You closed, though, just inside of that previous range here. So not the best close, but definitely nothing detrimental. Please don't misinterpret that as me calling this a bearish close up here. You can see that we have the same story as the S&P, but instead of a 2-day balance range, it was actually more like a 4-day range. Oops, through here with a rectangle. So you can see on Monday's session, we dip a toe in, sellers fail. And this is a really powerful way to view the market, right? Put yourself in the shoes of a seller. If you see this on Monday, intraday, and let's go to the hourly chart to walk through this exercise. If you see this breakdown here on Monday, what are you begging for as a seller? Oh, look, this is a failed breakout. We want to accept now back inside of this range. As a seller, you're begging for a lower high underneath 551 and rotation to the bottom end of the range. Tuesday says, no way, Jose. Higher low over 551. Look at today's session. Gap fill reversal, continuing to Brigade bolt over the top end of the multi-day hammers. Right, if we go back to the daily chart, look at these hammers back to back. Long lower wick, longer lower wick, inside bar on Tuesday. Perfect gap fill reversal, bar to bar higher lows. Bulls are in control. So again, consolidation is taking place. Maybe momentum is slowing down a little bit relative to what we had back here, but this is still a bullish chart, absolutely. In terms of the daily trend count, of course, it's up. This is going to start acting as a higher low. So really what we have is between 556.50 and 551 right here. As long as daily balance persists in here, bullish, Brigade bolts over 556.50, upper edge of the weekly expected move, brand new all-time highs, 566.56. If we do pull back underneath 551, just like the S&P, I'd be a little bit more cautious of trying to short through here, but actually on the hourly chart, what I would start to make note of is this would be the sequence on the hourly. If this is going to turn into a double top, right, very similar to what we talked about in the S&P 500, the neckline is what needs to break. And think about why this is important, because sellers finally get what they want, right? If we were to see a breakdown here, this is not enough. If we were to see a breakdown here, this starts to look good. As long as the lower high persists underneath 551, this intraday Brigade bolt from point A, that's 549.50, to point B, 546.25, that's where the attractive short exists, in my opinion, because you're taking out the weekly low, and that's really, again, putting the sellers in the driver's seat. This is what they wanted to see on the first initial breakdown. Let's see if they can make it happen on round two. Now, just like in the S&P 500, let's just pause for a second. We're talking about downside references because it's really all we have. But is this a base case? Is this the situation that we should really be like, okay, this is what we have to trade into the end of the week. This is it. It's going to be a short, right? I don't think so. Once again, if we had stronger sellers in the market, why is there a persistent hourly higher low over, I wouldn't really call this a clean double bottom, but call it that. Why is there a clean higher low here? Stronger sellers should be like, wow, look at that rejection of the all-time high. Let's try to battle for price acceptance here. Not even close into the close, right? And instead, I would say intraday, a very strong rebound back up towards that all-time high level, 556.50. So once again, main bull case is that consolidation here is great. Notice that on the NQ, or just the QQQs here, there was hardly any stutter at the bottom end of the overhead supply. Whereas in the ES, there was, the S&P 500. So I would think that this is definitely a go for tomorrow. Risk reward, arbitrary 2-to-1s in the blue sky territories are absolutely something we're thinking about. And just mind your trade location. If we have the higher low, then great. If you're just chasing this, if this is a straight up move and like this, very, very hard to participate risk reward wise, right? What are you going to do? Put a stop here? I mean, geez, I definitely would not take this much risk for, let's just say again, it's this, for this much reward into what is just a forecast from the options market at 566.50, excuse me. So that's what we've got there. Let's take a look at the intraday anchored view apps above the entirety of the stack, supporting all of the claims we've been making thus far that buyers are in control. We can come in here with the fibs up to the new high. I think that this reinforces, look at that, 38.2, right off the key level there at 549.50. There's just no reason to be short if you're over that. I just don't see it. This is bullish consolidation. I would think that you're just really giving yourself more of a headache trying to force the short as opposed to just trading the trend of the market on the higher time frames. So that's what we have there. Let's quickly take a look at the NASDAQ side of the market internals. A little bit stronger over here. Look at the volume inflows. So decent out of that. You have a much better close out of the advanced decline line, but still not in trend higher zone up here. That's noteworthy. A little bit better out of the cumulative build, but still, I would just argue momentum in general is pausing a little bit as we're really just contained in this multi-day range that we've been talking about thus far. If the internals are lit up like a Christmas tree, green across the board, then fine. We'll take these trades in the upward direction. It is aligned with the direction of the broad market right now and the bullish thesis that we've set forth. Let's quickly take a look at the NQ market profile. Let's set this up, get it on the screen, something a little cleaner. A couple more days. There we go. Same story, rinse and repeat the same analysis as the ES futures, noting that the value area here is slightly lower in the individual session, which means tomorrow if we open, and this is always something that we talk about in the pre-market prep, right? But if we open in range over value, then one of the immediate trade ideas that comes to mind is if we can pull back support over the value area high, then rotate to the upside, it's a great spot to try to look for longs here off of value area high, right? That would keep us outside of the Tuesday session as well. And also, why is this a lucrative trade idea in the first place? Because all the longs from inside of value, 70% of today's trading volume, all those longs are feeling great. They're feeling happy. They might even add to the position on a higher low over the value area high, right? So that's what we've got out of the NQ. All-time highs await us if we can crack up and over. NQ futures roughly 23.1. Let's get back on over to the platform here and let's take a look through the final index for our broad market. It's none other than the Rusty Russell. What do we have on the daily time scale? Let's zoom in a little bit further here. The balance is not as clear, I would say. However, the trend is definitely clean, right? We definitely have lows, higher lows, higher lows, higher lows, and it's been a very structured move in the upward direction. You can see this as clear as day on the hourly time scale where we have this balance. Here's your next brick, here's your next brick, and you just keep walking up the bricks, right? This next brick is forming up here, ideally. So you're in an uptrend, very, very clear there. If we go back to the daily chart, you can see that this larger down day on the Monday session, the lows were not even tested. I mean, look at this, lower edge of the weekly expected move. When I say lows weren't tested, I mean on Tuesday. On Tuesday, those lows weren't even tested. So a clean higher low over the previous resistance point here. We're not even testing the daily 200 SMA anymore. And as long as the IWM remains in an uptrend, I think that generally speaking, this acts as a bullish tailwind for the S&P 500. Notice the stronger close here as well out of the IWM, helping the case in the upward direction. So I think, all up, smalls building the bull thesis as well. If you take a look at the hourly chart, let's get a little bit more nuanced in terms of the intraday. Clean hourly higher low here today, another hourly higher low, a new higher high in the hourly trend count. Even if you were to pull back and offer an equal low, I would still give this the benefit of the doubt over 221.50s. I don't really see the large reason to really get aggressive on the downside, not even in small caps, right? If it is going to turn into a larger reversal, you're probably talking about needing some kind of look above and fail, maybe lower high develops in here. And then, are we going to short into this low? When I say low, I'm talking about this here. That doesn't strike me as being great. I really would just let this build out as a potential brick, a nice new balance range in the upward direction, and not change my tone to bearish unless really like the daily 200 is dropped and the weekly starts to offer a stronger reversal there. It's just not happening. Just not happening here out of small caps. We can throw on the intraday anchored view apps to be congruent. You're above the entirety of the stack. Once again, this is another reason. If this is going to be a double top, then fine, let it be a double top. That's only underneath 217.50. So you've got a ways to go until the bears really shift the momentum more meaningfully. So not seeing it. Let's come in with the Fibonacci's. Why not? Let's be congruent from the bottom up to the new high. Fib 38.2, stacked right at that sweet spot. Lower edge of the weekly expected move. We've got 217.25, give or take. No reason to be a big bear if we're over that level in here. We could let's come in from the bottom of this rally up to the new high. I think this supports same concept here, that these previous highs acting as support. That's kind of where we closed on Monday. Higher lows are above that currently. Really no issues in terms of a major trend reversal here out of small caps. Let's take a look at the Russell side of the internals quickly, and then we'll keep this thing moving. We'll talk about the threat of the SMH, but it's maybe like a pause threat. It's persistent daily balance. It's not a crash. Volume flows look fine. Advanced decliner over the zero mark. Not the best close here. Russell cumulative tick is a little bit weaker than what we saw in the NASDAQ and even the NYSE, closing a little bit more red here. So just carry that forward. I would think if small caps are going to pull back, once again, it's not the end of the world, but this consolidation seems reasonable to me. Let's see if they can catch themselves for another more meaningful higher low. This kind of is one on the hourly chart, but maybe a daily higher low now that we've neutralized to an equal high. Another daily higher low somewhere in here would seemingly be fine. That would be 220.25. All right, quick look at the RTY futures just to stay on track with our full analysis. Come on, let's get those profiles on here. There we go. Value area, point of control, rinse and repeat, same commentary of everything we've talked about. Notice that there's a little bit more overlap with the Monday high of day as well out of the Russell versus what we had in the Qs and the S&P. Just something to talk about, as a relative strength, relative weakness talking point, basically. You would just want to see price stay over that, which is roughly about 2260 in the RTY. One thing to call out here is that this poor high has been repaired. We have great excess in M period here, lack of material excess there. This has been repaired. This is unrepaired. Poor low from Tuesday. Doesn't need to be repaired, but it is something we'll carry forward in the analysis. If we test Tuesday's low, we should look for a break through it. That really shouldn't offer the strongest area of support. That's the Rusty Russell market profile. Let's just actually go through the NQ real quick in the ES. I want to make sure we didn't miss any excess or poor high, poor low. Good, looks good here on the NQ. ES, same thing. Looks good. No issues to repair on that. All right, let's get back on over to the platform. Let's do what we do best. Let's get into our sector watch here. Let's continue along with our S&P analysis. So, who was leading, who was losing, and where was the weight? Certainly for the weekly performance thus far, we're seeing energy lead the pack. That's a lighter weight sector. It's not necessarily defensive, probably more correlated to interest rates, and you could think of it as inflationary anyway, so we'll keep tabs on that. Just below, though, is the SMH, which, of course, heavy weight in terms of its influence over the broad market is definitely a risk-on sector. Materials are the third runner-up, and materials are the lightest weight sector in the market. So as and if we're putting in this consolidation, you would really want to see this XLK work its way up the list, probably overtake XLB if we're going to get brand new higher highs in the S&P 500. The laggards on the week are the staples sector down 1.56%. That's D for defensive, so that makes sense. All set there. Financials, that's not so defensive. That's actually more risk on. That's definitely a headwind for the market, but we'll talk about why it's not an issue on the structural chart momentarily. And then real estate is the third laggard on the week. Lightweight sector, not all that influential for the S&P. Let's jump into these structural charts and actually look at them. So energy breaking out here back towards like the higher or elevated barrel prices, at least CL wise, on the Middle East tension. So interesting natural evolution of this chart here, breaking back out off after these higher lows of really what was kind of this double bottom. It would seem as though this may act as a bit of a warning in terms of inflation and thus what happens with interest rates, say INT for interest rates. It's not a big enough correlation in my view that will break the S&P 500, but it is something to have in your back pocket. I think it's sort of counterbalanced right now with the cyclical side of the economy we'll talk about when we get to materials here momentarily. But let's take a look at the SMH because this is, in my view, the one chart that's going to really help us out into the end of the week. And you can see I already have an alert set on this at the low of day, basically, from today's session. Look at the candle structure here, right? It's definitely an inverted hammer, and you could certainly build the argument that if we take out its low, it's very reasonable that on a bar-to-bar count, making a lower low should entice either profit taking from buyers up here, or if shorts are looking to get involved near the previous all-time highs, if this is going to act as resistance, it'd be reasonable that underneath maybe a little bit of a pullback could develop. Now, we know semiconductors have fueled this rally in the upward direction here, so some give back on semiconductors is not the end of the world, but it would imply downward pressure to the S&P to the NASDAQ into the end of this week. So the takeaway is, if semiconductors crack this low, 283.20, 283 flat, if we're underneath that tomorrow, Thursday, the next day, Friday, of course, into the end of the week, then I would just continue to look for consolidation in the S&P 500. And if the semiconductors are pulling back, let's just say that this is the SMH inverted hammer, right? And we get some sort of brigade bolt that looks like this on SMH, let's say, SMH, let's make it pretty. There we go. If we get this and the market's breaking out, being led by something like materials, being led by something like energy, then we're probably not aggressively buying that with both hands and looking to get long at the highest high of the trend count as the heavyweight sectors pull back. I would not trust that high if it's being led by energy, materials. I wouldn't trust it if it's being led by consumer staples. and the semis are pulling back. Now, if the semis like look below and fail on the previous day's low, let's say instead of this path here, it looks more like this, right? Let's just extend this off to the right. If that's kind of what semiconductors look like, then fine. We will be a little bit more trusting of the S&P breakout into blue sky territory. So that to me is a top priority watch into the end of this week. If you're an intraday participant in markets, I really would encourage you to keep tabs on that 283.20. So with that, let's continue through the remainder of the sectors. XLB moving higher here, but notably, look at the XHB. XHB cyclical side of the economy, the home builders really getting in gear to the upside here. Remember that this is not good when it's overly divergent to the broad market overall. Let's not get crazy with history. However, if you go back to, oh man, how many years are we going to need? Let's go to a weekly chart. Let's grab maybe max available. Are we even going to have the data? It's right on the cusp, right? But you could see this is, can we get ITB maybe? ITB, is that home construction? Will we have more data there? Even this isn't quite giving us enough data, but there was a big lower high on the home builders prior to the large drawdown in 2008. Obviously, you had the subprime crisis anyways, and home builders were a big part of that. I'm not saying it has to be the same, but we don't want to see such a massive divergence here out of home builders into the new highs that we're printing in the S&P 500. So that's why we've really been keeping tabs on this. And so far, the weekly double bottom playing out over the neckline has been a little bit more of a bullish reinforcement for markets at these highs. Let's continue along with the status quo analysis, though. Let's get back to daily charts here. We talked XLB. Here's the XLK. A little bit better than the SMH with a little bit of a spinning top up here, but staying over these prior highs. If we could just get consolidation over 256.65, no problems in the upward direction. If it does pull back here, probably talking about a balanced S&P and really just trying to maintain price acceptance over the top of this range at 253. If we break down into that range, yeah, we probably go back into a firmer consolidation in the S&Ps, right? Let's move into the TLT. Bonds sort of ratcheting higher here, not quite getting a breakdown of that 85. We might have something to do on it when CPI comes out next week, but so far, nothing yet. Let's take a look at discretionary. This should also be a top priority for us intraday operators. As long as we could stay over 217.65, buyers trying to remain in control for the daily Brigade bolt here. Ideally, it gets in gear. What do we need to participate? Well, it'd be great if Amazon Prime sales were actually up to snuff. So if you've got Amazon Prime, please do us all a favor, do us shareholders all a favor, go out, buy a bunch of stuff, pump up the numbers. Amazon Prime needs to get in gear, as well as Tesla, of course. Those are the two main constituents in the XLY. If we can get both of those moving higher, maybe this, but unfortunately, both of those charts are a little bit of a struggle right now. We'll talk about why when we get to the core list. In the XLI, we're all set here. New all-time highs, no problems. XLU still holding that 80.25, no problems there, no red flags. XLV, it's no longer a top four heavyweight sector. It's the fifth. It's in the midpoint of the range. I'm really just trying to wait patiently for one of these two things to happen, get us out of the range. 138.75, 129.25. Consumer staples towards the bottom end of the range. We'll see if 80 can step up and act again as support, but really not much to talk about in the range. Move along to financials. I mentioned just moments ago, it's a laggard on the week, but really, let's think about this logically. If this pulls back to look like that, no problems, no issues over 51.65 in the XLF. And here's a sneaky one for you. Let's take a look at this daily structure. Look below and fail. Lower wick of today's session breaches the previous day's low, but where does the daily bar close? Inside the prior day's range. I would really be open-minded to financials looking like this, intraday, of course, on a Brigade bolt here, for tomorrow's session back up into the all-time highs. If that happens, your S&P 500 is not going to crash and burn. So watch financials very closely. Sellers could not get the job done today underneath the previous day's low. Let's take a look at real estate. Nothing to talk about over here, sideways in the range still. And communications, mild, gentle pullback over the previous all-time high. Really no issues with that. Almost an inverse, though, to what we just talked about on the XLF. Notice that we break the previous range high. Buyers kind of fail there, and we close inside the previous range previous session's range. There we go. At a loss for words here. If we can see a break underneath the low, then maybe the pullback intensifies, but still not really a concern if we're over that 105.60. So sectors all up are not really in a dangerous position right now. I would think that maybe the SMH offers the most headwind out of everything we've really looked through. And once again, just watch your previous day's low. So I think we'll just see this echoed over in the sector ratios. As a matter of fact, I know we will. Here is the video tutorial. If you're not familiar, check out the video tutorial top right-hand corner on how to set up ratios in Thinkorswim. XLK keeps us afloat. Risk on is still alive here. It'd be best if this ratio could get off the floor here in the XLY. We talked about why that's an issue already. Tesla and Amazon. XLF, the ratio does not look great. It's not enough to make me think risk off. XLC could use some improvement here on the ratio also. So, I mean, at the top side, we don't really have everything firing on all cylinders, but once again, is this telling us anything outside of what we already know, that momentum is slowing down? I don't think so. And the reason I would say that is because these two are really the cause for concern if markets are going to flip into risk-off sentiment. We do not see outperformance here, and we do not see outperformance here as these charts, and these charts take a little bit of a break. If we did see a major uptick, here, I'd be much more concerned, but we just don't have that. Let's take a look at the specialized ratios. You can see we're batting 5 for 6 here. The only issue is your small cap comparison between growth and value. So I still think that bullish risk on is the name of the game here. The B set would also agree, noting that the gold ratio continues to move in the downward direction. You're not seeing a flight to safety there. The TLT ratio to the S&P still moving in a downtrend here. No flight to safety there. And take a look at Bitcoin. Don't take a look at my girlfriend, but take a look at Bitcoin. She's the only one I know, right? Is that even the lyric? Take a look at my girlfriend? I don't know. You can correct me in the chat if you've made it to this point in the video. We'll know. But new all-time high on Bitcoin on today's session. Finally getting a little bit of lift here in the upward direction. We'll see if we can't crack and get more meaningfully over that, 112,275 on Bitcoin futures. Of course, you could use the spot price over on TradingView as well if you're looking to chart that. Generally, bulls in control here. I like the bull flag breakout. It's time to rock and roll. Let's see if this is a sleeper new all-time high or if the media is really going to pick up on this. The last time Bitcoin made a new all-time high back here, it was silent. There was no noise in the media. Social media didn't erupt. Nobody said a word. Let's see if they capture it this time. I think that things have to get nutty. You know, we're probably talking about 150K Bitcoin if it's going to get picked up there in the mainstream news. So that is your risk off or on-off B set. Let's move into the dollar and interest rates. We're still watching the dollar here. Has not gone through a meaningful trend reversal over 97.75. If it breaks, you can see I have the alert there for a reason. If we get a meaningful trend reversal here, I would be much more open-minded to persistent consolidation or even downside action over in the S&P 500. These are negatively correlated right now, the dollar and equities. So if it happens, fine, but just look at these upper wicks. Persistent rejections, previous lows, now acting as resistance, So I'm not willing to pull the ripcord yet and say, okay, it's time to rock and roll for the bears based on the dollar correlation. We're not there. If we look at interest rates mildly lower today on the 10-year bond auction at the 1 o'clock time frame, but really nothing to move the needle. We're still inside of that overall range. When I say overall range, I'm of course referring to this right around in there. Let's take a look at the inverted ZT for the 2-year, probably unchanged on expectations here for the Fed tracker tool. Let's get on over to that. Speaking of, and the answer is yes, unchanged, still dealing with about 90+% odds for a pause into the end of the July session for the meeting on the 30th. If you take a look at the odds for cuts into the end of 2025, still looks like 1 and 2 cuts. Remember, this is down from the 3 cuts that were being priced in when Powell was a little bit more vocal about his concern for the labor market. Obviously, the numbers, last Thursday, really came in just fine. No issues out of the NFP or the unemployment rate. Let's look at the economic calendar. There's really not been much here. You could see the 10-year bond auction today, the FOMC meeting minutes. Nothing that really spooked the market too much. We'll watch tomorrow morning very closely. The jobless claims here, the initial and continuing. We've been keeping tabs on this, but if you just open this up, notice here, market expectations have been off the mark recently, right? We've been coming in underneath expectations, which technically gives Jerome Powell leeway to keep rates higher for longer. Ultimately, I know, he's sort of looking out for this ghost of inflation that seemingly has not shown up yet. Let's take a look at the earnings calendar. There's nothing to talk about over here. Delta is not an honorable mention. Neither is Conagra, neither is Levi's, neither is WD-40. Maybe Byrna. If you don't know what the Byrna is, then go ahead and give them a quick Google. Non-lethal firearms. Interesting. Crazy that that's even listed as a publicly traded company, but so be it. Nothing to really talk about on the earnings calendar. Let's get back on over to and through the remainder of the analysis. Nothing really here on the bond relationships. I'd be much more concerned about inflation if the longer end of the curve breaks out to a new high. It just hasn't done that, and these are still rolling over, which would indicate we're closer to the rate cutting part of the cycle rather than a rate hiking part of the cycle, which nothing we didn't already know anyways, but it's just still keeping an eye on the longer end. As we look at credit spreads, they continue to roll here. So if these are just going to break for lower highs, fine. No issues out of the credit spreads there, which would be a proxy for volatility anyways. Vol, as we'll see momentarily, is just suppressed big time. Notice that we did get a higher move out of the HYG as well today. This is the LQD down below. Let's go SPX. We did get a push higher here. However, it's still divergent, right? So this would be another chart that indicates, okay, if you're chasing the highest high in the SPX and you're still down here in the HYG, I don't want to say like end of the world red flag, but it is a small divergence that would align more so with not wanting to be a long late to the party up there. Let's take a look at the breadth charts, which is another small, tiny red flag. Let's go to daily charts here. You can see that we have a mild uptick out of the 200 SMA chart. However, downtick in the 50 SMA, downtick out of new highs versus lows as the broad market is pushing towards new all-time highs. You can see this as well if you take a look at the RSP. A little bit of a weaker close here in terms of the actual candle structure relative to what we had over in the weighted SPX down below. You'll see something similar over in the QQQE as well. You get the green close on the NDX weighted, the red close here on the QQQE. But once again, is this a cause for concern? Is this, oh my God, we should short the market because it's divergent? No, absolutely not. Let's take a look at volatility. Floored here. Let's quickly jump into the VVIX just because why not? Moving down towards the comfortable floor as well. You probably can't hear it on the audio recording, but we just got some serious dark skies to roll through the nation's capital. Completely pitch black. It's 6:41 right now. Big thunder and lightning storms coming through. Sheets of rain falling off the floor-to-ceiling glass windows up here in the penthouse office. Unbelievable. Contango out of the volatility futures. We've got ourselves a decent contango as well in the 9 versus 30-day VIX. And look at this. New lows out of the 1-day VIX down here at 745. Just absolutely lovely. This is all the signs that you want to see in a bullish market right now. There's no big cause for concern other than possible slowdown simply based on the SMH. Not enough to cause a full-blown market crash. Maybe persistent consolidation, but the buyers overall still remain in control. Let's get into the core list of companies. Let's rip through this. Then I've got 11 trade ideas. Can you imagine that? 11 ideas? It's a lot. Here we go. Notice NVIDIA break the new all-time highs on a gap and go. The lockout rally just continues. It depends on how the SMH acts tomorrow. If NVIDIA is over 163.40 and the SMH is underneath today's low, I would be a little less inclined to chase this into blue sky territories. I would be a little bit more reserved. The best opportunity here on NVIDIA would be a big pullback into this 160.25. Gap fill reversal if we could support here, then trading back into blue sky territories. That's the best trade on NVIDIA, but if it's here and the SMH is in range, maybe just smaller size, really tight stops, not wanting to be a victim of, okay, look above and fail. Next thing you know, it's doing this for a pullback. Technically, the daily trend is still up, right? There's nothing wrong with the daily trend here, but your trade location is just really poor. So watching NVIDIA for that. Microsoft, it's undoubtedly bullish, breaking out of this balance range. It's helping the S&P 500 higher, but what do we do about it here? It's been a really rough intraday trader. I'm not in love with the setup. Maybe gap fill reversals off of 498. I don't love it inside of today's range. You could see how up and down it was in here. Maybe Brigade bolts along these lines. It's a little bit insulated from the semi side of things at 504.60, so we can watch that, but probably a lower tier watch. Apple will be a lower tier watch. It's definitely setting something up here on the daily. We shouldn't let this just slip totally from our imagination. Look at the daily hammer here. I think that this easily could act as a higher low, but it's still in the balance range. If this higher low persists and we can retest the 213 on a Brigade bolt above, that's probably where we start to get active when we can finally clear the top end of the balance range there. Let's take a look at Amazon. So once again, Prime Day, really ugly stuff on the Tuesday session, but today's Wednesday, inside bar here. Let's take a look at the hourly chart. What I love about the hourly chart and why Amazon continues to be a top watch is just look at this structure here. Really clean stuff, nice building blocks in the upward direction. If we can break up and over this 224, along these lines, really looking for that move. Next target overhead is at 228.75. So bullish Brigade bolts there on 224. Amazon, in play. I would say it probably wants to hold 221s if it's going to be picture perfect. If it's back down here around 217.75, maybe it starts to look a little bit more distribution-esque. You really shouldn't have big pops down into that level more than once. Confirm it as support again, and then you're sort of back above trying to build out a higher low for continuation higher if it's going to go. Let's take a look at Google. Still really ugly. I don't see what there is to do on Google. If you've been crushing that on Google, you keep doing your thing. But for me, this chart structure is just not offering anything. It's undoubtedly an uptrend here. Maybe if there's something over this 180.75, but even that to me is not really the best prospect. Look at this overhead supply here. Maybe you go to the origin of the breakdown at 185.32. I mean, you guys know me. Round numbers only up here in the office. Let's go 25 on that. 185.25. Maybe there, but I really don't love it. What I would like to see is, this, and then let's close this gap overhead. Something along these lines would be much more lucrative to the upside. That's the earnings gap from back in February. Let's get into the metaverse. Hopefully the Wi-Fi doesn't go out. The storm outside is just totally intensifying. I'm sorry if I sound a little distracted. The lightning is incredible. Metaverse, beautiful, beautiful trade today. Just what a picture-perfect setup. I'll show you this on the 5-minute chart. But look at this balance range. Very, very simple balance rules in place, right? If you can get a Brigade bolt over, there's a nice boom, 726.25 to continue in the upward direction, that's where you want to get long. Well, lo and behold, go to a 5-minute chart. There's a hammer there. Take it even further to a 2-minute chart. Here's the, look at this. I mean, come on. Beautiful bull flag right over the top end. We caught that one with the group this morning. Absolute thing of beauty. But as we look forward to Meta, now it's like, all right, let's not lose sight of this. It clearly has momentum. There's two outcomes. Either we get the higher time frame hourly Brigade bolt, we set an hourly higher low at 726.25, we use the same level, or high and tight consolidation probably only plays when and if we're over the previous all-time high. That would be a watch. I'd find it very hard to get long here, headed into that from the bottom side up. The risk reward just isn't there. Very, very hard to participate in that trade. So it's got to really send it and then offer this Brigade bolt, 741. These lower highs right there. Let's take a look at Tesla. Tesla. Yeah, it's been a little rough recently ever since the America Party launch over on X, and shareholders are clearly speaking. One thing I would call out here, and honestly, this is on me for not doing my homework, but this needs to be yellow because ultimately it is a gap overhead. This gap is partially filled. Wow, it is just getting wild out there. My goodness. This gap is partially filled here. So this lower high, again, I apologize for sounding distracted, but when you got big floor ceiling glass windows like this, there's no escaping it, right? There's no escaping it. We're not closing the blinds. It's beautiful in its own right. So anyways, this lower high here, after a partial gap close, not able to close that overhead, tells us that, again, shareholders are voting with their dollars. They're selling the stock. I'd probably be interested in Tesla underneath this 291 on a Brigade bolt lower here to start targeting your 281.60. And the reason that is interesting on the hourly chart is because it's the lows from this big move back here, right? This is when Elon was sort of tweeting like a madman about a number of things. You can go find the tweets. And, if we sort of go to this low, that would make some sort of sense to me. Something along those lines, okay? So that's Tesla. Let's keep it focused here for the remainder, regardless of how beautiful it looks outside. JP Morgan financials, this ties in directly with the XLF analysis, so 280.25. No problems there. Netflix, swing traders rejoice. Your 1260 level continues to hold. Next key step is a Brigade bolt over this 1299, 1300 area. That clearly offers thin structure retracement. That might even be a day trade, but if you're day trading it, I would take contracts where you're sizing the position and you're not going to sort of take it on the chin from a really spready move, right? So just always be aware of that on these Netflix options. They do tend to get a little wide. Palantir has started to perk up a little bit. I would love to see the Brigade bolt here off of 140.25, pullbacks to that level, looking for risk reward in the upward direction. Not really interested if it's back underneath. I suppose 137 holds continue to look good on it, but the best trade idea would be this here into the end of the week. Risk, reward, 140.25. Let's look at Broadcom. Blue sky territories over 277.50. Rocking and rolling in the upward direction. I would really not participate inside of this range. Obviously, it's been pretty ugly through there. I would just let it be. I would not take an aggressive stance one way or another on Broadcom in here. Look above and fail a little bit, higher low. You still have this general idea as well, higher lows here. Just don't really love getting active in there. I would prefer to see a larger push to blue sky territories and then go. AMD will be a short watch, just purely based on look above and fail. If the SMH, and this is where we tie in that SMH chart again, right? Here's your SMH daily candle. There's the low. If the SMH does this, what do we want on AMD? Look above and fail, lower highs persist under 139.25. Brigade bolt here probably comes down into these lows around 132.65. Let's get into these 11 ideas. Can you believe that? 11 ideas. Let's try to keep it fast here so we don't keep you longer than we need to. The rain is pulsing. We've got Robinhood, a nice balance range here between 95.50 and 90.40. I would trade this either way, but these are the primary watches. Over 95.50, target the all-time high, $100.50. Consolidation in here, don't touch it. If we're underneath 90.40, there's enough thin structure where the thin structure breakdown is attractive to short. The options market is liquid enough to sustain that. We would look for 85. If we can get Brigade bolt off of 85 on the higher time frame, think of this from a daily perspective, daily Brigade bolt down off of 85, we change the bias to long here at 85. Here it is on the daily chart, right? Straight up move. Offers a pullback, previous range highs. If we could support it, great spot for a higher low, and then major continuation in the upward direction. You can literally see the alerts that I've got set for this, okay? So that's Robinhood up first. Let's move along to MicroStrategy. MSTR is the ticker on that, of course. Daily chart is going to begin. I like these equal and flat highs back here. With Bitcoin breaking to higher highs, it's sort of a must watch. If we can get a clean Brigade bolt over 422.50, you've got some upside to trade for there. The other opportunity is if MicroStrategy pulls back, you can also set an hourly higher low over the breakout point here at 404.75. That's MSTR. Next up is a couple of familiar faces. Oracle, ORCL, has been a watch for a long while now, off of a number of key levels, but 215.25 is still in play, as is 226.50. New highest high, if this does pull back, this is the first spot to be looking for that higher low. 226.50 out of Oracle. TSM is going to be very similar in the sense that we have a possibility for Brigade bolt here after holding loosely. It was not the cleanest hold, but we did hold over these previous highs, right? This action in here finally resolved higher today. A Brigade bolt out of today's range in the upward direction. Asterisk. Big thunder. It's hard to not, I don't know if the microphone's picking that up. It probably isn't because it's dialed in to be such studio quality here. But if the SMH is inside of range, maybe TSM over this 232.85. Maybe. All right. That's what we've got there. Let's continue along. We've still got more to go. Disney. DIS. Disney at 120. Take a look at that level on the daily chart. Look at this 120 Disney, mild pullback into these previous equal highs. If this, right, is going to offer one of these, great spot for a higher low. We're going to start to walk the levels back up in the upward direction. Primary target would be the bottom end of this range here, around 122.5, we'll call it for round numbers' sake. And then, of course, beyond that, it's your local highs around 124. Can we get an edit? 124.25. All right, so that would be your upside there. Again, premise, one of these. First stop, second stop. All right, that's Disney. Not interested if this just blows right through. So if we get large red-bodied bars that look like this, not interested. If we get controlled bodied bars that look like this, dojis that start to form here, great. Maybe we're looking for that higher low. That's Disney. Let's move along to Boeing. You got to tell me you heard that one. This is like a storm of epic proportions. I'll see if I can get some photos to include in the edit of the video. It's just unbelievable outside right now. I'm sorry, I said I wasn't going to be distracted, but it's hard not to be. Boeing, 218.60. 218.60. Jesus, take a look at that. If we get this equal high retest, maybe that's a possible idea. Datadog, let's take a look at Datadog. DDOG. Hopefully the internet doesn't go out and I can even post this in the first place. My God. Datadog has a 2-day balance range here with gap above, gap below. So a very simple watch. Whether or not we Brigade bolt over 147.50, under 142.50. A little bit thin on the options market here, so just keep that in mind if you're going to watch Datadog, but generally, balance rules in place, once again here, and once again here. Either side is fine, preferably with the direction of the broad market, depending on what happens. These are some lower liquidity available trade ideas, so probably trading the underlying, not the options, but Affirm. is the first up on there. You can see that we're building out what starts to appear as though a beginning stage, head and shoulders here. If we're underneath the 66.85, you've got a little bit of thin structure to retrace down towards this breakout area here, which is closer to about 62.75. 62.75 there, something along these lines would be the main premise. So you want risk and reward to the downside. If it's going to break to the upside, you are dealing with a daily uptrend here. It is constructive on the daily, so this is a little bit of top fishing, if you will, not bottom fishing, top fishing. If it's going to do this, you could probably just target these equal highs on the hourly chart. You're probably looking at the opening print of the Tuesday session. 71.30 is close enough to a round number for me on a lower price stock like this, so that would be the watch there. That's AFRM. Let's go Visa. Visa up next. Take a look at this through the lens of inverted head and shoulders. What I like about it is the gap overhead. This was the tokenization threat from Amazon and what was it? Amazon and Apple, was it? Generally, the competition with the card processors, right? When the folks were like, oh, we're just going to tokenize our own stuff and forget about Visa, forget about MasterCard. But look at this. Clear breakout level around 359. If we can get here and then Brigade bolt over 363, that looks really good for a gap close. Again, a little thin on the options contracts, but Visa, a possible watch there. Not interested if it breaks underneath this 350, 350. It needs to keep the consolidation in here. That's that. Let's go to Dash. Dash is DoorDash, of course. Look at these equal highs inside hammer. If we Brigade bolt over 247.65, again, low liquidity on the options chain, but shares up into 257.75, about 10 points available on that potential move. That is that. Snowflake is another idea here. Look at the balance range that's forming. Key level, key watch is for this. Up and over 226.25 gets us to 236.15s. That should be a round number. You guys know me and my preference for those round numbers. So that's that. What I like about the Snowflake intraday chart is you can actually subdivide this range a little bit around 220. The consolidation has persisted in the upper portion, very short-lived in this area down here. So Snowflake there. The final one, I don't know if this counts. This might be 12 if we do this, but ASTS is the final one to watch. And this is a longer term idea. If we can pull all the way back into this 40 area, 41 area, I'd be maybe willing to add some longer term shares on that. If you look at the weekly chart, it's the top end of this range. So perhaps weekly high or low along those lines if this is going to continue to be a theme for the market as we move forward through time here. And that's what I've got for you. If you enjoyed this, all of these different trade ideas, we've been doing this every day with the group at market close. So we usually start around 3:30 in the live squawk room, and we just go through the scanner. We go through all the different ideas. We basically run this entire midweek market analysis, the full Monty, every day with the group at market close, 3:30 to about 4 o'clock. And if you're interested, if you want to get these trade ideas literally daily, you can come hang out with us. It's the first link down below in the description. If you're not interested, that's fine. We do it twice a week as always, and we'll be live every morning up in the Penthouse office daily for our 8 o'clock Eastern pre-market prep. We'll see you there tomorrow morning. We do have the jobless claims. Don't forget about that. And that's really it on the economic calendar. Jobless claims tomorrow morning. Friday is pretty quiet. If you enjoyed the video or learned anything new, let us know down below in the comment section or by giving the video a very simple thumbs up. And with that said, we'll see you in the office tomorrow. Oh, I messed it up, right? Because now we can't say, I wish you a green trading week, and I'm just going to repeat myself. But as always, I'll see you in the next one.